Welcome to this week's edition of the Regtech Africa News Roundup. And here are the top headlines for the week.
NAICOM unveils strategic plans to bolster resilience in Nigeria's IT industry. CBN dismisses reports on banks failing car stress tests and shows public of industry resilience. FIRS and CAC to enhance collaboration for increased revenue generation. NAICOM urges insurance firm directors to uphold ethical standards. Bank of Ghana's Subtech advances supervisory capabilities. African Export-Import Bank introduces PAPSS to boost intra-African trade. FRC says volume of Tier 2 and 3 audit firms requiring improvement is unacceptable. Now the news in details. The Director General of the National Information Technology Development Agency NITDA, Kashifu Nuwa, has provided insight into the agency's strategic vision to fortify Nigeria's information technology sector, placing a strong emphasis on resilience in the face of challenges. Inuwa shared these plans in Abuja during the Connect the Dots conference, where he underscored the necessity for resilience from all stakeholders within the sector. The Central Bank of Nigeria (CBN) has discredited recent media reports suggesting that certain licensed commercial banks in the country failed the capital adequacy ratio (CAR) stress test for international authorization. The Apex Bank urged the public to disregard the report and assure them that the Nigerian banking sector remains robust. The capital adequacy ratio is a crucial financial metric used to evaluate the financial health and stability of banks. The Federal Inland Revenue Service (FIRS) and the Corporate Affairs Commission (CAC) have expressed their commitment to fortify the existing collaboration in order to amplify the revenue generation efforts. Registrar General of CAC, Hussaini Magaji, emphasized this commitment when he visited the FIRS Executive Chairman, Zak Adedeji. Magaji noted that the enhanced cooperation and collaboration between the two agencies will play pivotal roles in Nigeria's economy, particularly in revenue generation. Directors of insurance firms have been encouraged by the National Insurance Commission (NAICOM) to adhere to ethical standards in their operations. The Commissioner for Insurance and Chief Executive Officer of NAICOM, Sunday Thomas, gave the encouragement at the 2023 Insurance Directors Conference in Lagos. Sunday stressed the importance of implementing policies and measures that promote the observance of environmental, social and governance (ESG) principles, adding that failure to do so poses shared risk to insurers, businesses, government and society. Let's go for a short break, and when we come back, the news continues. Welcome to the 2024 Regtech Africa Conference and Awards, happening in the city of Lagos, Nigeria, on the 23rd and 24th of May 2024. This event promises 2 days of unparalleled insights and interaction. Theme: Harnessing Partnerships for Africa's Prosperity, Bridging the Data Trust Gap. 50+ speakers, 1,000+ participants. Join us as we empower women in Regtech and captivating roundtable discussions. Calling all C-level executives, regulators, policymakers, investors, and key industry stakeholders. This is your platform to drive innovation and regulatory excellence. Register now and be part of this transformative experience at the 2024 Regtech Africa Conference and Awards. Engage, connect, collaborate. See you there. Now in African news, the Bank of Ghana (BOG) has emerged as a trailblazer in supervisory technology (Subtech), offering valuable insight into the benefits and challenges associated with adopting technological solutions for financial oversight. The success is attributed mainly to the implementation of the Online Regulatory Analytics Surveillance System (ORASS) from 2019 to 2022. The African Export-Import Bank has introduced Pan-African Payments and Settlement System (PAPSS) in order to address payment challenges in Africa. PAPSS is a digital platform that facilitates cross-border payments in local African currencies and eliminates intermediaries and conversion fees. Now in the world news, the Financial Reporting Council (FRC) has recently unveiled its inspection findings for Tier 2 and Tier 3 audit firms, revealing significant shortcomings in audit quality. According to the FRC's report, only 38% of audits reviewed required no more than limited improvement and 24% required more than limited improvement. While these results represent only a small risk-based sample, FRC said the number of audits requiring significant improvement is unacceptable. And that's it, Regtech Africa News Roundup. Join us again next week for all other important news updates.